Hi and welcome to the weekly market update. It is Tuesday the 27th of August 2013. Okay, so again been quite a quiet start of the week for the markets, still in that holiday season and still in the holiday period, so I'm seeing rather light volumes still in the market, hopefully picking up into September. In terms of data that we saw yesterday, the main data was that of the US. It was the durable goods number. This actually coming in much lower than expected. We were expecting not too strong a reading to come in at -4%, but we actually saw a headline number of -7.3%. So that was our main data out yesterday, that weakness from the US. We had a holiday in the UK and then not too much really out of Europe. In terms of data that we've seen today, we've seen this morning we saw some IFO data out of Germany. It's a sort of a sentiment survey, so business climate and expectations. We saw the numbers coming in better than expected for Germany, so some decent sentiment coming out of Europe there. Otherwise, in terms of data, again, nothing from the UK really, and then from the US this afternoon we had some Case-Shiller house price data, and then we saw the Richmond Fed Manufacturing Index number, which came in better than expected, alongside some consumer confidence index data, which again came in better than expected. Also, we've seen a focus over the last couple of days and sort of over the weekend. The focus is Syria in the news at the moment, and also we've seen some speeches Kerry from the US. Outlining that the US could be ready to act. Tensions are building there between Syria and the West. Discussions happening on what exactly action should be taken. Should we go in and intervene after the attacks that we saw previously on the Syrian civilians? So that's a large focus in the markets at the moment. People sort of retreating a little bit, maybe going to those safe haven products and assets, just because we're not really sure what could come of this over the next few days particularly. So something to keep an eye out on there, and may explain why we're seeing some of these flight to safety that we're seeing at the moment. Okay, so in terms of data, or in terms of where we're trading now, we've got the FTSE around the 64.52 mark, the Dow Industrial Average around 14.862. In terms of currencies, we've got the euro around 1.3374, and then for cable around 1.5535. So still seeing some strength there for cable. And then for gold, seeing that around 14.19, and Brent we're seeing at 113.43. Okay, so in terms of data for the rest of the week, again picking up on data as we go throughout the week. Tomorrow out of Europe we've got German import price index data along with some consumer confidence data, expecting that confidence again to pick up after we saw the iPhone numbers today, hopefully seeing some strong confidence from Germany out again tomorrow. Otherwise we've got Italian retail sales, and then from the Eurozone as a whole we've got the M3 money supply. Last time we saw quite a large contraction in the M3 money supply, so seeing that credit really tightening, so probably quite closely watched. Again, we're expecting another fall, not quite as dramatic as last, so falling to around 2% for the M3 money supply. And so people will be watching out for that. There's lots of concerns at the moment, particularly in Europe, around the tightening of credit and where we're seeing this credit and who it's available to, and who, where we see it, where we are seeing it. So it will be quite a closely watched number tomorrow. And from the US in the afternoon, a bit of housing data, mortgage applications, and also pending home sales. But the focus really for tomorrow is going to be from the UK. In terms of data, just CBR reported sales. That's not really what we're going to be focusing on. What we've got around lunchtime is Governor Carney giving his first speech since his forward guidance and the Bank of England meeting at the start of the month. So I don't think what we are expecting to see is him to reiterate his point that he wants these lower rates for longer, for this extended period, probably reiterating his unemployment rate that we are hoping to see before they think about moving rates. Again, he may talk about those knockouts that we see alongside those conditions. However, we really do expect him to reiterate this. I don't think he saw the reaction in the market that that was really desired last time. We saw quite a strange reaction, and probably the opposite of what he was hoping to see. So I think he really is going to try and reassure the market and really push through his point and make the point that he is committed to these lower rates for longer, and that we should really be expecting to see lower rates for much longer. Despite obviously we've seen better data in this, making the markets think, well, maybe the rates will go sooner. I think he'll reiterate that yes, we have seen some better data, however it's nothing compared to the pre-crisis levels, and that's what we need to focus on, getting the economy back to those pre-crisis levels before we can sort of think about tampering with rates, or particularly hiking them substantially. Okay, so then finally into Thursday, we've got some French business confidence data that's expected around 95, same as last, nothing too dramatic there. From Germany, we've got CPI readings, expecting those to come in slightly down on last, and we've also got unemployment data from Germany, expecting the rate to come out at 6.8% in line with the last, nothing too different there from Germany in terms of unemployment. From Spain, we've got their GDP reading for quarter 2. Again, we're seeing these confirmations of quarter 2 readings, expecting that at down 0.1% month over month and down 1.7% year over year, just to confirm what we've already seen. Also from Italy, from Europe, we've got business confidence data, expecting that to tick up slightly, so looking for some better sentiment there still in Italy. And then no UK data Thursday, probably still digesting those comments from Carney on Wednesday. But from the US, we've got those usual initial jobless and continuing claims, expecting those to come out, nothing too different from the numbers that we saw last week. And then we've got personal consumption data as well. We sort of see PCE core numbers, and then into tomorrow we see a bit more into Friday, so we'll see some further US personal consumption data. Okay, so but to begin with Friday, let's start off with Europe. We've got German retail sales, expecting those to come in better than last. We're seeing a positive 0.6 reading expected from the negative 0.8 last, so hopefully some good retail sales. We'll also see some Spanish ones alongside those German sales. And then we've got Italian unemployment data, again expecting that to tick up slightly for Italy. For Europe as a whole, we've got CPI data, expecting it at 1.2%, and we've also got some consumer confidence data for Europe as a whole, expecting that the last reading was down 15.6%. Hopefully looking for some better data there from Europe, as we have seen numbers improving, particularly in the form of PMIs. That data, so hopefully that will pass through onto sentiment. From the UK, a little bit of housing data, mortgage approvals, and also we see M4 money supply from the UK as well. And then from the US, as I mentioned, we've got some personal consumption data in terms of personal income, which we're expecting to fall slightly, and also personal spending, that also expected to fall slightly. Nothing too drastic, but we are expecting to see a slight decline there. Also got Chicago purchasing managers numbers, expecting that to tick up slightly, 53 from 52.3. And then finally, to finish off, we've got University of Michigan confidence, expecting that to tick up again slightly, 80.5 from a prior reading of 80. Okay, so I think the focus really for the week is going to be Carney tomorrow afternoon. That's really being watched by those UK markets, and I think that will be the focus for the week. Thanks very much. As usual, any feedback, please get in touch.